Hello everyone. So today we are going to start with a new chapter, that is bills of exchange. So in this chapter we will be majorly concentrating only on the practical part of the bills of exchange, where accounting entries of the journal entries will be passed. Okay. Regarding the theoretical part, I won't be covering most of the theoretical part which is not required for the practical part. This theory will be covered in the law chapter, that is Negotiable Instruments Act of 1881. In that chapter you will be covered with bills of exchange and also the promissory notes. In that chapter you can in depth go into these theory parts. But currently for the accounting part, whatever theory is required will be dealt by me. Sure? Okay, let's start. So before going to the accounting for the bills of exchange, let us understand what is bill of exchange before this. Okay. Let us say there is Mr. A. There is Mr. A. Now what Mr. A has done is he has sold some goods to Mr. B. Mr. B. Fine. Now what has happened? Mr. B is not making the payment because Mr. B doesn't have the money to make the payments. What will Mr. A do? Now Mr. A will say, okay, fine. So today you won't be making the payment to me. You are saying me that after 3 months you will be making the payment. But I am not sure that whether he will make the payment or not after 3 months. What if he runs away? So I tell him that I will issue you something called as a bill of exchange. I will issue you something called as a bill of exchange. Okay, in which I will write the transaction that has happened between me and him, the monetary units or the monetary value, whatever the transaction has happened for, and on after how much months will he be making the payment to me. Those all the things will be mentioned over here, and party names will be mentioned at the end. On the top there will be stamping done, promises no bills of exchange, and at the end my name and Mr. A's name and Mr. B's name will be mentioned over there. Now what Mr. A does is he signs the bill and sends it to Mr. B for acceptance. For acceptance. Okay. For acceptance, he sends this bill to Mr. B for acceptance. That Mr. B should check all the details, whatever is mentioned in the bill, and after verifying all of them, he should sign it and give it back to Mr. A. Fine. Now let us look at some terminals before going ahead. So, since Mr. A has drawn the bill, Mr. A will be called as drawer of the bill, or the drawer of the bill. Mr. B will be called as drawee. Mr. B will be called as drawee because he is accepting and giving the bill back once he is accepted. Now what happens? So once the bill is with Mr. B, Mr. B will verify all the terms and conditions mentioned in the bill. Once agreed to that, he will sign the bill. Wherever his name is mentioned, he will just sign it off and resend the bill again to Mr. A after acceptance. After acceptance. Now, who is having the bill with him? Mr. A is having the bill with him. So, Mr. A will also be called as holder of the bill. Mr. A will also be called as holder of the bill because he is holding the bill with him. Now what happens after 3 months? Let us say after 3 months, what will happen is, let us say bill was issued in the month of January. After 3 months, it is January 1st, so Feb, March, April. On April 1st, Mr. A goes to Mr. B and shows him, see, 3 months back you had signed the bill and now I am giving the bill back to you. Now make me the payment because you have agreed on in January month that after 3 months you will be making the payment to me for whatever goods I have sold to you. Now Mr. B looks at the bill, oh okay, I have told you that I will make the payment, right? So first option that he has is to make the payment. He has to make the payment for the bill. Second option, whatever he has is, he can say, I don't have the money right at this point, so I won't be making the payment to you. So now again two terminologies will be used over here. Mr. B will make the payment, right? Let us assume after 3 months he will make the payment. So he will be called as payer. Right? The one who is making the payment will be called as payer. Mr. A, who is receiving the money will be called as payee. Just a minute. It will be called as payee. The one who receives the payment is called as payee, and one who makes the payment is called as payer. Okay. These terminologies will be majorly used while solving the questions, because in the question they will just mention payer, payee, or holder, holdee, drawer, drawee, something like that they will mention in the question. So because of this, what will happen? You won't be knowing who is drawing the bill, who is accepting the bill. Because of this, the entries might get missed, because in some cases we will issue bill receivable, in some cases we will have bills payable. But for a single party, a single bill can be bills payable or bills receivable, both. That we will see when that happens. But currently understand that whatever bills are issued will be taken care over here. Clear? Whatever names are given to you should be really carefully read. Fine. Now going ahead. So there were two conditions. Case number A. I just mentioned new color. Case A. Payment done. Case B. Payment is not done. Payment not done. So this will be termed as honoring of bill of exchange. This will be termed as dishonoring of bill of exchange. Clear? So whenever I say the bill was honored, that means the payment has been done on time. The payment has been done on time. And whenever I say the bill has been dishonored, that means the bill on the due date of the bill, that is after 3 months, for in my example, the payment is not done on time. The payment is not done on time when was the bill was expired or the bill was due for payment. At that time, if the payer is not making the payment, in that case it is called as dishonoring of the bill of exchange. Clear? Yes. So now, this is a case study. This is the basics. This is the basics of how a bill of exchange works. This is how a bill of exchange works. Let us say, sir, what if the bill is dishonored? Why simply they go through all this process to draw a bill and all? So what Mr. A can do is, let us say the bill of exchange is dishonored now, right? The Mr. B is not making the payment to Mr. A. Because of this, Mr. A now has stamped the bill. He has already stamped the bill, right? In the beginning, I told you that it will be stamped. Now, this bill becomes legally valid as per Negotiable Instruments Act of 1881, under which he can go to court and drag Mr. B to also the court, saying that, see, I have issued him a bill for which he has not made the payment. He had only accepted the bill and signed the bill and given it back to me, saying that he will make the payment to me by 3 months. But now he is saying me that he won't make me the payment. So he has missed from his part. He has dishonored the bill. So please look after him. So the court will do whatever it wants to do. Now it is left to the court on to recover the payments. Clear? So this is the option Mr. A has when he is drawing a bill of exchange, rather than just saying it by word of mouth. Today he might say that, okay, make me the payment of 3 months. After 3 months, Mr. B will say, no, when did I say that I will do the payment? I won't be doing the payment today. So now Mr. A is stuck over here. He cannot do anything because he don't have any record of Mr. B confirming that after 3 months he will make the payment. So now what Mr. A can do? Mr. A, if he draws a bill of exchange, he will have a legal document. He will have a legal document saying that Mr. B had agreed that he will make the payment after 3 months. But since now he is not making the payment, I will drag you to the courts. Clear? This is how a bill of exchange really works. Fine. Now let's move ahead and let's see how the accounting is done. How the accounting of bill of exchange is done. Okay. So again, whoever has not watched the video for journal entries, please have finish off the videos for the journal entry first and then come to this chapter, or else you won't understand a bit of a journal entry. Please complete that chapter and then come over here. Clear? Yes. So let's continue. So let's look over here. So again, the whole chapter of mine will revolve around this. The whole chapter will revolve around these particular things. So asset and expenses are single family, where debit increases and credit decreases. Right? Whenever I debit, my balance increases, and whenever I credit, my balance decreases. Same goes with family number 2. Capital, income and liability. In that case, what happens? Any debit will decrease the value, any credit will increase the value. This is how it works. Clear? Okay. So I hope that you are really clear with the basics of journal entries, and I will begin the chapter. Fine. So, first case. Now, in the books of payee, who is payee? The drawer of the bill. In my case, Mr. A. I am from the, see, in this chapter they will basically ask you from the point of Mr. A, from the point of Mr. B, and from the point of Mr. C. Now, sir, who is Mr. C? I am here, so don't worry. Mr. C we will look at afterwards once we are finished with the basic journal entries. So once that is done, we will go for Mr. C's case. Fine. Now currently let us assume Mr. A and Mr. B. Who is Mr. A? The person who has sold goods and some balance is receivable. Some balance is receivable by him from Mr. B. Who is Mr. B? Mr. B is the person who has purchased the goods, and is yet to make the payment for the goods. Clear? Fine. Now, so in the books of payee, in the books of Mr. A, the person who has drawn the bill, the person who has sold the goods and to whom the amount is due. If I am supposed to receive the money, I will draw the bill. Mr. B cannot draw the bill. I will draw the bill. Okay. Only in case of promissory note, Mr. B will be issuing promissory note. That is not required for now. So whenever I do a sale, let us say Mr. A has sold some goods to Mr. B. Now whenever I do sale, what is the entry that I pass? I pass the entry that is B's account debited to sales account, right? So to sales account. So here in this case, Mr. B will be my what? Mr. B will be my asset. That is my debtor. He will be my debtor. Whereas sales is a what? Sales is a income account. Wherever income increases, I will debit the account. Credit the account. And whenever my debtor's value increases because of the sale transaction, I will debit the account. Hopefully this is covered in journal latest chapter. Then going ahead, now Mr. B or drawee was a debtor to us. Now I am crediting his account. Whenever debtor's account is credited, what does that mean? Whatever balance was there in debtor's account will reduce because debtor is an asset, and whenever I credit the account, the value in the account will decrease. The value will decrease. So because of this, I have credited the account. But why I have credited the account? Because in the balance sheet, if you see, if I open a balance sheet for you, this is my balance sheet. So my B's account will be categorized here because he is my debtor. He is my debtor, right? For whatever XYZ value it might be. Now I am opening a new account. It is my bill receivable account. So what I am doing over here is I am cancelling off whatever amount was there over here and transferring it to bills receivable account. So at the end of the day, one balance is become reduced, one balance is increased. So at the end of the day, my balance sheet will tally. Because I am deleting one amount over here and same amount I am transferring it to what account? To bills receivable account. On what side? On asset side. Only. So I am just transferring the entries here and there. That's it. Why? Because now Mr. B's, that is drawee's balance, whatever was there, has been transferred to what? To bills receivable account. So I am decreasing one asset and increasing one more asset over here. Okay. So both will have the same effect and nullifying effect, and my balance sheet will tally. There won't be any difference in the balance sheet. If you want, you can just try it out with some dummy examples. Clear? Okay. So this is my first entry. So whenever, in every question, whenever a bill of exchange is created, this will be my first entry. Clear? Okay. Now let's move ahead. So now what can happen? So whenever I have given him the bill will be accepted by him, given back to me. And once the bill is accepted and given back to me, I will pass this particular journal entry. Now next what happens? Next, whenever the bill is honored, that is, he is making me the payment. So whenever I am receiving the payment, I will debit bank account first. Yes. Then what happens? Whatever bill receivable I have created before, is it necessary to be kept in the books? Once I receive the payment for the bill whatever I had, I am receiving the payment now. So this bill will be valid after the payment is received? No, because this bill won't have any legality because the payment was supposed to be received. Mr. B has made me the payment, so I am happy. So why this bill is required? This bill is not required. So tear it away and throw it. So whenever I tear and throw it away, I credit bill receivable account. I credit bill receivable account. Why is that? Because I am reducing the value of asset. See, I have told you before that bill receivable is an asset. Now I need to reduce the value of bill receivable. So what do? I will credit bill receivable account. That's it. So I have debited bank account because I have received money. I am crediting bill receivable account because once the payment is received by me, this bill receivable whatever I have is not required. It has to be torn off and thrown away. Right? This bill won't have any legality because payment is received. So I am crediting the bill receivable account, which was an asset account, by reducing the value, to reduce the value in the bill receivable account. By this, I have cancelled off my bill receivable. This is done. Okay. This was my case number 1. This was my case number 1, where the bill is honored. Let us take case number 2, where the bill is dishonored. Wherever the bill is dishonored, that is the payment is not done on the maturity of the bill or the due date of the bill. Now what happens? See, whenever drawee doesn't make me a payment, drawee, the Mr. B is not making the payment now. So because of this, what is happening? Whatever bill I have in hand is expired now. Why? Because the bill was valid for 3 months. The bill was valid for 3 months. But after 3 months, the bill is not valid now. So what to do? I will credit bills receivable account because the bill is no more valid now. The bill is no more valid now. Now what happens? Because, before this, tell me, has Mr. B made me the payment? Has the drawee made me the payment? No, sir. Why? Because he is not making the payment. That's why the bill is dishonored, right? He is not making the payment. That's why the bill is dishonored. So, now what I do? I again increase the value in drawee's account. I again increase the value. So, basically, I have reversed this to journal entry. Whatever journal entry I have passed over here is reversed now. Right? See, drawing's account is debited and bill receivable account is credited. So basically I am reversing the bill creation entry. Bill's creation entry, whatever I have passed, I am reversing it right now. Because why? Because the bill is of no use now. Because he is not making the payment. What will I do with a piece of paper roaming here and there? There is no use of paper. Right? So now I am cancelling the entry. How? By debiting drawing's account to increase increase its value. So here again what I am doing over here, if you have a look at the balance sheet, once again, what am I doing? I am transferring whatever balance was there in bills receivable to my debtors account again. So I am cancelling this off and writing the amount over here. Again my balance sheet will tally. Now I am transferring it over there because the bill is not valid. So because of this, the entry will be drawee's account debited to bill receivable account. So if you don't understand this particular set of entries, please have a look at it again, because these are the basic entries. Believe me, the entries are going to be getting more and more complicated after we move ahead. Clear? So now this was from the point of view of Mr. A. That is drawer of the bill, the one who draws the bill. Mr. A is drawing the bill. Now let us look from the point of view of Mr. B. That is acceptor of the bill, or the payer of the bill, or the payer, the one who makes the payment. Mr. B is making the payment. So this whole entries will be in the books of Mr. B. Clear? Okay. So once the sale entry is passed, that is, in this case it is the purchase entry. It is a purchase entry. What is the entry that I pass for purchases? For purchase, what is the entry that I pass? What is the entry? Purchase account debited. Account debited to what account? To Mr. A's account. Mr. A's account, right? See, here purchase is expense. Because of the purchases, my expense is increasing, so I am debiting the account. And then Mr. A's account is credited. Why? Because Mr. A will be our creditor. Mr. A will be our creditor. So that's why his balance is increasing, so I am crediting the account now. Fine. This is the first part. Now, let us look over here. Whenever I accept the bill, this piece of paper will become a bill of exchange. This piece of paper will become a bill of exchange. Now, once this becomes a bill of exchange, I will pass my first entry, Mr. B. Mr. B will pass the first entry in his books. What is the entry? On acceptance of the bill, Mr. B will pass creditors account debited to bills payable account. Okay. Again, I will draw a balance sheet for you people. Again, I will draw a balance sheet. This is my balance sheet. Now, on the liability side, I had Mr. A of X rupees. Okay, this was the entry passed. Because this is the entry passed, now I have put the Mr. A's balance in the liability side. Now what I am doing, I am accepting a bill. Mr. B is accepting a bill of exchange. right? So because of this becomes what? Bill payable, bill payable, right? It is payable to Mr. A. The amount is payable to Mr. A. Again, it's the bill of exchange. So what I do over here also is, I will just transfer whatever was balance in the Mr. A's account to Mr. B's account. This is my new balance. This is the old balance is being cancelled. So one value is being reduced and one more value is being increased over here. Because of this, again what will happen? Again what will happen? My balance sheet will tally. So what is the entry passed for this? I will pass creditor's account debited or the drawer's account debited. Why? Because once I agree to make the payment, I am having a new liability, that is my bills payable. And whenever my liability increases, I will credit the account. So that's why bills payable account has been created, because it is payable to him. It is payable. Tomorrow I have to pay him. So it is a liability for me. So I am increasing the value in the bills payable account. This was my first entry. And in that, after that I am debiting the creditor's account. Whenever we debit any liability account, what does that mean? What does that mean? That means the balance in the creditor's account has been reduced. The balance in the creditor's account has been reduced. So to reduce the value in the Mr. A's account, I am debiting it now. Okay. So in my books, Mr. A's account won't be shown ever. Now only bills payable will be shown. Only bills payable will be shown. Clear? Okay. So this is how we pass the first entry. Then going ahead. Let's say bill is honored on the maturity time. So same like the previous case, whenever bill is honored, Mr. B will make the payment. Mr. B will make the payment. So whenever the payment is made, I will credit the cash or bank account depending on the case. And whatever bill payable was there, is it valid now once the payment is done? Once the payment is done, is the bill valid? No. So no more the bill is valid. So I am going to cancel the bill from the liability side. Now how to cancel a bill? Whatever value was there is being reduced to 0. Whenever liability reduces, I will debit the account. I have debited the bills payable account. Here this is how we pass the honoring entry in the case of drawee. Then let's take one more case. Let us say the bill is dishonored. He does not make the payment. Mr. B is not making the payment. Now whenever Mr. B is not making a payment, will there be a cash inflow or outflow? No sir, because there is no payment being done. So there is no cash outflow. Then what will happen? Then again what I will do is, whatever acceptance entries we have passed over here will again be reversed. If you see, again it will be reversed. So creditor's account is credited and bills payable account is debited. Why is bills payable account debited? Because whatever bill I had in my hand, I am not making a payment. Since the payment is not being done, the bill is invalid now. The bill becomes invalid now. Because of this, I will reduce the value in the bills payable account in my books. On the liability side, I will reduce the value of bills payable. And whenever bills payable value reduces, liability reduces. And whenever liability reduces, I will debit the account. Clear? Okay. And why is creditor's account credited? Because now because of this transaction, I have not made the payment. But I have to make the payment on any one date, right? So I am payable again to Mr. A. So because of this, I will credit Mr. A's account once again. So that to show some balance remaining in Mr. A's account, which is a liability. He is my creditor. So I am increasing his balance once again. Clear? See, in simple terms, what happens is, whenever I issue a bill, I need to create a bill. Okay, I need to create a bill. So depending on case, Mr. A's case or Mr. B's case, see if it is an asset or a liability to him. See, bills receivable will be an asset, bills payable will be a liability. Always remember this, bills payable will be a liability, bill receivable will be an asset. So depending on whose books you are passing the entry, see, for that person, is it a asset or is it a liability? Depending on that, open bills receivable account or bills payable account. This is the first case. So after that, once it is honored, reverse it off by passing it to cash. But if it is dishonored, reverse the whole creation entry. Because now the payment won't be done against the bill of exchange, but simply his account will be shown as a liability in my books. So because of this, I will reopen his account in my books. Clear? Okay. Now, okay, different cases, different journal entries. So now there will be some different cases. So once the bill is created, after that, so see, this bill creation entry, whatever you have in all the cases, whatever bill creation entries you have here and here, all these entries remain the same. These entries won't change. These entries will remain the same. Okay. But what will change then? From the next step onwards, directly the bill will not be honored, but there will be some other circumstances that will happen. Let us look at them one by one. Okay, fine. So the first case in this. So once the bill is issued, there will be a one more story. Now once again, story time. What happens is, let us say everything has happened as per the plan. Mr. A has the bill with him. Mr. A has the bill with him signed by both the parties. Yes. Now what Mr. A does is, the bill is issued for 3 months. 3 months is the due validity period for the bill. That means till 3 months Mr. A cannot approach Mr. B for the payment. If Mr. A approaches Mr. B, what will Mr. B say? Hey, what man, I have given the bills for 3 months, right? It is 2 months only. So 1 more month is remaining for me. So go back. I won't be making the payment today. But I will make you the payment only after 3 months. So now what happens? Now Mr. A is in need of funds. Mr. A is in need of funds. He needs some money. Let's say the bill was for rupees 1 lakh. So now Mr. A needs money. What can he do? He cannot go to Mr. B because Mr. B won't make the payment. Right? So he will approach the bank. He will approach the bank and say and tell the bank that this is a bill which is created by me and Mr. B is supposed to make me the payment. So I need the payment today itself. So I will give you the bill and you give me the money. On the maturity date, you go to Mr. B and collect the payment to yourself. So you keep the money, I don't want. But for today, you give me the money as a loan. Now, whenever bank gives a loan, will it give for free of cost? No, sir, because it will charge something. So it will charge a discount on the bill. Let's take a monetary example. Let us say the bill was created for rupees 1 lakh. Fine. He goes to the bank. Bank says, I will pay you only 98,000. So then what is rupees 2,000 over here? The difference of rupees 2,000 whatever we have is what? Is called as discount. Now again the bank will go to Mr. B and collect how much? Collect full amount of rupees 1 lakh from Mr. B. Now how much the profit made by the bank? It is collecting 1 lakh rupees, but it's paying only 98,000 to Mr. A. So 2,000 rupees whatever is there is the benefit or the profit that a bank has made. So why should bank make the payment? Because when the bank is giving you some money in advance for 1 month, the bank is giving you the money. So bank should keep some margin, right? Bank is not working for you, right? Bank is working for itself. So bank should make some money. So because of this, bank will keep a certain margin. Depending on question that varies. So bank will keep a certain margin and it will give you the remaining money. In this case, for a bill of rupees 1 lakh, I have received how much? 98,000 only. I have received only 98,000 rupees. So whatever 2,000 rupees was there is a discount that is done by the bank. So I am at a loss of rupees 2,000 rupees. No issues. It's an expense for getting the money early. Fine. Now, what is this whole procedure called as? This procedure is called as discounting of the bill of exchange. So whenever you listen to the word discounted, the bill was discounted with the bank. Then remember that the bill was discounted with the bank and I am receiving the money early. So these entries should be passed now. Let us look at the journal entries. Okay. In the books of payee, that is Mr. A. In the books of Mr. A. Now what happens? In the books of Mr. A, when the bill is discounted with the bank, see, first of all we pass the bill creation entry, just like we had passed it before. That won't change. Next what happens? Next, bank account will be debited. Why? Because I am receiving money. So how much will the bank amount be debited by? 98,000 rupees. Because I am receiving 98,000 rupees. Yes. Bill receivable account will be credited. Why? Because whatever bill I had is going out of my hand. Now who has the bill? The bank. The bank has the bill now. Right? The bank is having the bill because tomorrow the bill should be given to Mr. B to make the payment, or else Mr. B won't make the payment. So I am giving the bill to the bank, saying that you take the bill and collect the payment from Mr. B. I won't be making the payment, but Mr. B will be making the payment. Okay. So now bill is with the bank. The bill is with the bank, right? So the bank is having the bill. The bill will be shown to Mr. B on the due date, and the bank will only collect the money, and it won't give anything to Mr. A. Clear? Okay. So I have created bills receivable account because whenever the bill goes out of my books, whenever the bill goes out of my books to the bank, the value in the bills receivable account should be made zero because I will not be having the bill. I will not be having the bill. So because of this, to reduce the value of an asset, I have created the account. Clear? And the difference amount whatever we have for 1 lakh rupees to 98,000 rupees is called as a discount. So this discount will be a expense, for Mr. A. For Mr. A, the discounted value will be a expense, that is rupees 2000. 2000 rupees will be a expense. So whenever expense increases, we will debit the account. So that's why the bill discounted in the discount amount has been debited because it's an expense to Mr. A, and whenever expense increases we will debit the account. So discount account has been debited. Clear? Okay. Now going ahead. When the bill is honored, let us say the bill is honored on date. After 3 months, Mr. B is making the payment. Now tell me, is Mr. A receiving anything over here? Mr. A is receiving anything? No. Why? Because the bill is with the bank. Now bank will go to Mr. B and ask for the payment. Will Mr. B make the payment to me? No. He will make the payment to the bank. Will bank give anything to me? No, because bank's money is recovered now. So I don't know, bank and Mr. B will do the transaction. So on honoring of the bill, there won't be any entry passed in the in the books of Mr. A's account. In the Mr. A's account, there won't be any entry passed for the honoring of the bill. But in case of dishonor, let us say the bill is dishonored. That is, no payment is made by Mr. B. Now what will bank do? Bank has given me the loan. So tomorrow if Mr. B doesn't make the payment, Mr. B is not making the payment, what will bank do? Bank will come and catch hold of me only, right? Because it has given me the loan. So tomorrow I have to pay the bank back. So because of this, the entry will be what? Two bank account has been created. Why? Because I am making the payment to the bank now of rupees 1 lakh. I have to make the payment to the bank because bank will catch hold of me because Mr. B is not making the payment. So bank will come to me and say that I have given you the loan. To Mr. A, the bank will say I have given you the loan. So pay me back the loan because Mr. B has not made the payment and I don't know what to do with him. So you take care of him, but you make me the payment today. So I am paying him. How much? Rupees 1 lakh. And I will again debit Mr. B's account. I will again debit Mr. B's account so that he will become my debtor once again. See, once the account was created by creating the bank entry, right? I had created his account. Now I am again debiting his account to show more balance. And I am creating bank account so that the cash outflow is shown of rupees 1 lakh. Clear? Yes. Now let's come to books of Mr. B. So in Mr. B's book, what will happen? No entry needs to be passed except for the entry for the bill honored or dishonored. So now what happens? See, whatever entries we have seen in the first case where the bill was created, honored and dishonored entry we saw. So in that case, let us see. The discounting transaction is done between whom and whom? Mr. A and the bank. Is Mr. B concerned with any of this? Mr. B is concerned with any of this? No. Why? Because he is supposed to make the payment. To whomever he makes the payment, it's not an issue. Either to Mr. A he is making the payment or to the bank. But at the end of the day, he has to make the payment against what? Against the bill of exchange issued. Clear? So, whatever discounting transaction is done between Mr. A and the bank, it is not of concern to Mr. B. So, Mr. B would not pass any entry in his books. Mr. B will not pass any entry in his books of accounts. Clear? But what about the entry while making the honoring of the bill? He has to pass the entry. Why? Because he is making some payment when he is honoring the bill. He is making some payment while honoring the bill. Right? So, bank account will be credited because the payment goes out, and whatever bills payable account was created will be debited to reverse it off. Now the entry we saw before. Now, coming to dishonoring. Again when the bill is dishonored, again the same entry will be passed. Here we have seen the entry, right? Remember? Here we have seen this entry when the bill is dishonored. See, Mr. B will pass both honoring and dishonoring entry, depending on the case to case. If it is honored, he will pass this entry. and if it is dishonored, he will pass this particular entry. This is how it is done. Okay. So, but for discounting, there is no entry being passed in the books of Mr. B because he does not care whatever Mr. A does with the bill. But at the end of the day, Mr. B is only concerned with making the payment. Clear? Okay. Now, let us go to case number 2. So now what has happened? In case the bill is noted with notary public, let us take a small case. Let us say the bill is dishonored now. The bill is dishonored. What Mr. A does is he goes to a lawyer. He goes to a lawyer and says that this is a bill which I had drawn 3 months back. Now Mr. B has not made the payment. It is dishonored, by the way. So as a proof of dishonor, what Mr. A will do is he will take the bill to the notary public, that is the lawyer. He will take the bill to the notary public, that is the lawyers. Some of the lawyers have the license to practice as a notary public. So what does they do? They will take the bill, look at the transactions and verify and sign it and say that this was a valid bill. So Mr. B has not made the payment and this can be taken to the courts for putting a case on Mr. B. So for that he will charge something called as notary. Something called as notary. The process is called as noting of the bill. The person's name is notary public, the one who signs the bill saying that the bill is genuine bill and there is no fake transaction being done. And this can be produced in the court as a evidence of non-payment. So for this he will charge something called as noting charges. He won't be doing it for free. Nobody does anything in this world for free, right? Everybody accepts something. Everybody expects something from you. So now, in the books of drawer, what happens? See, first of all, I will pass the dishonor entry. That is, drawee's account or Mr. B's account debited to bill's receivable account. Bill's receivable account credited and drawee's or Mr. B's account is debited. Here, for bill receivable, I will take the bill amount only. For bill receivable, I will take the bill amount only because that is what is to be reversed by crediting it. Bill receivable was an asset and I am reducing the value of asset. So, I am crediting the value in the journal entry of the exact value. And I will incur something called as notary charges. These notary charges are to be recovered from whom? From Mr. B. From Mr. B, I will recover noting charges. See, noting charges was not my cost actually. Because Mr. B has not made the payment, I am recovering the cost now. I am recovering the cost from Mr. B only. Clear? So, this becomes a kind of income to me. So, I am crediting noting charges account so that it will be shown as an income. So, at the end of the day, now Mr. B or the drawee or Mr. B will be payable for the bill amount, that is my actual sale amount, plus noting charges whatever is payable. Clear? So, the total amount will be payable by Mr. B to Mr. A. Now, in the books of drawee, see, by the way, noting entry only comes when the bill is dishonored. When the bill is honored, there is no payment, no issue between Mr. A and Mr. B. Both are happily living together. I mean, not living together. I mean separately, but still they are happy, right? Because the Mr. A is receiving the payment, Mr. B is making the payment. So both have no clashes between them. But when the bill is dishonored, that is Mr. B is not making the payment. In that case, what happens? In that case, all the issues comes up and Mr. A will take the bill to the notary public for noting it. Only when the dishonor happens, noting charge will come up. Remember this. So in the books of drawee, it is Mr. B. In the books of Mr. B, what happens? Bills payable will be debited. Why? Because bills payable is a liability, and by debiting the liability, I am making the balance zero because the bill is no more valid now. The bill is no more valid. I have to draw a new bill to make it valid again. But the old bill is not valid. Then noting charges. What happens with the noting charges? These noting charges will be payable. So it will be an expense to Mr. B. For Mr. B, the noting charge will be an expense because he has to pay it to Mr. A now. So it will be a expense. So I am debiting it. Because my expense increases, I will debit the account. Then drawer's account is credited. Total amount payable. This plus this. So two amounts I am adding and paying it to whom? To Mr. A. It is payable. So that's why Mr. A becomes our what? Creditor. And whenever creditor's balance increases, I will credit the account. Because it's a liability. Okay. Yes. So going ahead, now let us see the case number 3, that is renewal of the bill. What does renewal mean? Whatever was there, I am renewing it. I am making it new again. I am making it new again. Let us see what does that mean. So what does renewal mean? Let us say I have drawn a bill for 3 months. I have drawn a bill for 3 months. After second month, Mr. B comes to me. Mr. B comes to Mr. A and says that, see brother, I cannot make you the payment after 3 months also. After 1 month is remaining, right? Because for 3 months bill, 2 months are already passed. 1 more month is remaining. After 2 months, Mr. B comes to Mr. A and says that, brother, I cannot make you the payment after 1 month. So you do one thing, cancel the old bill and give me a new bill. For which Mr. A says, okay, fine, take it. What Mr. A does is, he cancels the old bill. Now, how to cancel the old bill? By passing the dishonor entry. By again passing the dishonor entry, you will cancel the bill. What is the dishonor entry? Since Mr. A, that is the drawer, Mr. A drawer has the bill. First of all, he will create the bill receivable account. Why? Because bill receivable account was a asset. Now by creating it, I am clearing it off from the books with the same value. Like for example, let's say 1 lakh rupees was there. Now on debit, what do? I again increase the value of Mr. B. Mr. B's value I again increase, saying that he is my what? Debtor. He is my debtor. I will increase the value for rupees 1 lakh itself. This was the first entry that I passed. This is my what? Dishonor entry. But I won't be writing it as dishonoring, but I will write it as renewal. Cancellation of old bill. This is my entry for cancellation of old bill. Okay. I will be passing a dishonor entry for cancelling also. See, remember this, whenever you are cancelling any bill from the books, then pass the reverse entry for the bill creation. See, whatever entry you pass for bill creation will be reversed to cancel it off. That's it. Now what happens? Now, Mr. A says, brother and all is okay, fine. But see, you are supposed to make me the payment after 1 month, but which you are not able to. And you are asking me to create a new bill for 3 months again. But I am at a loss over here. Why? Because my working capital is being stuck. He is not making the payment of rupees 1 lakh for how many months? 2 months plus extra 3 months. 5 months. 5 months is not making the payment. So what Mr. A does is, he will issue a new bill. He will again issue a new bill, but with the condition that he will pay him some interest. Now. He will pay him some interest. Why? For the extra period, whatever is added, for that period he is supposed to charge some interest to Mr. B. That interest computation we will see as per the question, but just remember that whenever a bill is renewed and a new bill is issued to the customer or the drawee, in that case the same step happens. Mr. A draws a bill, gives it to Mr. B, Mr. B accepts it, gives it back. So this is how a new bill will also be drawn. The same procedure remains, but entry will be what? Drawee account to bills receivable. Additional component is interest over here. Why interest is added over here? Interest becomes an income to Mr. A. To Mr. A, interest becomes income. And whenever income increases, we will debit the account. We will credit the account, right? Whenever income increases, we will credit the account. So, to drawee's account, how much will I put the amount as? Full amount plus interest amount. So, both amounts will be reversed over here. Clear? Yes. Then, in the books of drawee or Mr. B, in the books of Mr. B, what to do? First of all, cancel the old bill. How will I cancel the old bill? By passing again the dishonor entry. So, what is the dishonor entry? In case of Mr. B, or the drawee, bills payable account will be debited whenever the bill is dishonored. Why? Because bill payable is a liability. I am debiting it now so that to cancel it off. Whenever a liability is cancelled from the books, I will debit it by debiting it to decrease the value. So to what? To Mr. A or drawer, to drawer's account. Why? Because drawer was my debtor. Now I am increasing his value once again so to show some balance in his account. Clear? Because before, while creating the bill, I have decreased the value in his account. Now I am reversing the bills payable entry. So I am crediting his account now. Okay. So this was the entry for cancelling the old bill. Now a new bill should be created, right? But before creating the new bill, what should Mr. B do? Mr. B should pay the interest to Mr. A. Pay the interest to Mr. A, right? So the entry would be what? Interest account debited. Why? Because interest is expense to Mr. B. So Mr. B is paying the interest. So whenever expense increases, we will debit the account. And whenever the payment is done, bank account balance reduces. And whenever the asset value reduces, we will credit the account. Then, creation of a new bill. See, once the bill is cancelled, the old bill is cancelled, now I need to create a new bill, right? So whenever I am creating a new bill, what is the entry that I pass? Again the same entry. Drawer's account debited or the creditor's account debited to bills payable account. Just like the old bill, how I pass the opening entry to create a new bill, same entry will be again passed to create a renewed bill. The only change is this entry. Interest should be paid and then the new bill should be created. Clear? Okay. Now, going ahead. Retirement. What does retirement mean? Leaving the job. So here also, what happens is, let us say the bill was created for 3 months. Let's say the bill tenure was 3 months. But before 3 months, after second month, Mr. B comes to Mr. A and says that I am going to make the payment today itself. I am going to make the payment today itself. So he has paid in what? 1 month early. He has made the payment 1 month earlier. Right? So for this 1 month earlier, Mr. A becomes full happy. Oh, bhai sahab, you made the payment before 1 month. So take rebate. Now what does rebate mean? It's like a discount given. It's like a discount given from the total payment. So let's say if the amount was payable was rupees 1000, Mr. A says that 1% I will give you a discount. Go, enjoy your life. So that would be how much? 90. 9,000 will be paid. Difference of rupees 1,000 will be what? Called as rebate. Which is expense for Mr. A and income for Mr. B. Just like we had discussed discount allowed and discount received. The same way. Now what is the entry for that? See, whenever he makes me the payment, the bill is required to be held. No. Why? Because the bill receivable will be cancelled on spot once the payment is received. When the bill is honored, we know that the bill of exchange will be invalid from that point onwards when the payment is received. So now, bank account will be debited because I am receiving the payment. Bill receivable account will be created. Why? Because I am, what am I doing over here? I am cancelling the old bill. I am cancelling the old bill because it is invalid now. So let us take some amounts. So 1 lakh rupee was the bill value. He is making me the payment of rupees 99,000. So 1,000 rupees is what? Is 1,000 rupees is the rebate given to Mr. A, given to Mr. B, because he has paid me the money early. So I am giving him a discount of 1,000 rupees. Clear? Okay. Now in the books of drawee, in the books of Mr. B, what happens? So Mr. B is making the payment for bill payable, that is 1 lakh rupees. Right? 1 month early is making the payment for 1 lakh rupees. So bills payable, whatever was created before, will be cancelled off now. No need of keeping it in my books of accounts. So take it away. So then he is making the payment of rupees 99,000 rupees. Yes. So bill bank account will be what? Created. Then what happens? Rebate account as a income. Rebate is an income to me, and whenever income increases, I will credit the account, and whenever expense increases, I will debit the account. This is how we pass the rebate account entry. So remember, in the books of drawer, or the person who is selling the goods and the bill receivable, the person who has bills receivable, in his books, rebate will be what? Rebate will be a expense. But for the other person who is making the payment, rebate will be a income. Out of 1 lakh rupees, he is making payment of rupees only 99,000 rupees. Clear? Okay. Now, insolvency. What do you mean by insolvency? Insolvency means that person has raised his hand saying that I don't have any money to make you the payment. Now. So what happens? So let's say 1 lakh rupee was to be recovered from him. He is able to pay only, let's say, 50,000 rupees. Only half of the amount is able to pay. Remaining half is gone. Remaining half is not recoverable from him. If you do whatever with him, you go to court also, there is no point, because now he is declared as insolvent by the courts. So that he cannot make any payments more than this. Clear? Now what is the entry to be passed? See, let us say 1 lakh was the amount of bill of exchange created, bill receivable. He makes the payment of rupees, let's say only 20,000 rupees out of the whole amount. Out of the whole amount, only 20,000 is received in my bank account. So the remaining amount of rupees 1,000 is 80,000 is called what? It is called as bad debt. It is called as bad debt. So whenever any amount is not recoverable from that person, it is not recoverable from that person. See, dishonor doesn't mean it is not recoverable. It can be recovered. But when I say a person has become insolvent, that means it is no more recoverable from that person. So that's why it will be a bad debt to me. So now we know that bad debt is a expense. So now what is the entry that is passed? So bank account debited. Why? Because I am receiving the money. How much? Rupees 20,000. Bill receivable account is again credited. Why? Because bill receivable was asset, and once he becomes insolvent, the bill receivable whatever I have in my hand, whether the time has passed or not, it becomes invalid. It becomes invalid because from tomorrow I cannot recover any money from him. Right? So that's why I am cancelling the old bill. I am cancelling the old bill. How? By crediting the account. It was asset. By crediting it, I am cancelling off the entry. Then bad debts account. Bad debts account. What is this bad debts account? See, because I am not able to recover rupees 80,000 from him, from this guy, from Mr. B, because of this what happens? Amount will be transferred to bad debt, and we know that bad debt is an expense for me. For Mr. A, it is an expense. So whenever expense increases, we will debit the account. So the amount with what? The amount that cannot be recovered, that is rupees 80,000. That is rupees 80,000. Clear? Yes. So now coming to the drawees books. Drawees, the person who has accepted the bill. So in this books, I will first of all debit the bills payable account. Why? Because this bills payable, whatever was there, is of no use now. And bank account for rupees 20,000, because 20,000 I have paid him, right? I have paid 20,000 rupees to Mr. A. Now because of this, I will credit the bank account because the asset value is being reduced. Then the remaining amount of rupees 80,000 will be transferred to an account called as deficiency account. An account called as deficiency account. The amount not able to be paid, that amount will be transferred to an account called as deficiency account. So for Mr. A, it will be a what? It will be a expense, so it is debited. For Mr. B, it will be an income kind of account, so it will be a credit entry over here. Clear? Yes. Now, moving ahead. Now comes new character, Mr. C. Mr. A is done, Mr. B is done. Now Mr. C is come into play. So before going to the next part, I am like requesting you people to just pause the video, go back and have a look at all the journal entries once again. I think this PDF will be uploaded to the website also, to our website. On the website, go and download the PDF, go through all the entries once again, because if you don't have a thorough grip in those entries, please, endorsement will be a difficult part for you people. So please refer all the entries before and then start with the video of endorsement of the bill. Please revise those entries once. Try to write down entries by your own self. After that, come to endorsement part. Clear? Okay, now let's start with endorsement. Now, what does endorsement mean? Let's take an example. Now, three parties. Mr. A will be the drawer of the bill. We will also call him as endorser. I will tell you what does endorsement mean. Then we have Mr. B and Mr. C. Mr. B will be the drawee of the bill. Mr. C will be the creditor of Mr. A, to whom the bill is endorsed. I will tell you what happens. We have Mr. A over here, Mr. A over here, and Mr. B over here. Now what happens? I am issuing a bill to Mr. B. He accepts and sends me the bill back. So now this is a bill of exchange with me. Both parties stand here. Yes. In this case, Mr. B owed some money to Mr. A. Right? Mr. B owed some money to Mr. A. Because of this, I am drawing a bill. So tomorrow that, after 3 months, let's say, Mr. B have to make the payment to Mr. A. Mr. B have to make the payment to Mr. A. But what Mr. A does is, Mr. B also owes some money to a person named Mr. C. To a person named Mr. C. Because of this, what Mr. A will do is, he will give this bill to Mr. C. he will give this bill to Mr. C. Let us say all the amounts are rupees 10,000. All the amounts whatever was due is rupees 10,000. Now because of this, Mr. A is giving this bill to whom? To Mr. C. This giving of the bill instead of paying him is called as what? Endorsement of the bill. Endorsement of the bill. See, in actual terms, bill was drawn by whom? By Mr. A. It was accepted by Mr. B and given back to Mr. A. Right? So Mr. A was the holder of the bill. Was the holder of the bill. The person who was holding the bill for rupees 10,000. For rupees 10,000. But now what has happened? Mr. A is transferring this bill to whom? To Mr. C. Why? Because Mr. A had to pay some amount of rupees 10,000 to Mr. C. Now, to whom is Mr. B supposed to make the payment? To whom is Mr. B supposed to make the payment? Mr. B is supposed to make the payment to whom? To Mr. C. Why? Because whoever holds the bill gets the payment. Whoever holds the bill with him gets the payment. So now who has the bill? The bill has transferred from here to where? To here. Now this guy is holding the bill. So Mr. C on the due date will go to Mr. B and say that, see, Mr. A has given me the bill, please make the payment. Mr. B will look at the bill. Oh yeah, I only have signed the bill, right? So take the payment, take. No pocket. So take the payment. So Mr. B will pay whom? Mr. C and not Mr. A. Mr. A is no more into the picture. Now what we need to do is we need to pass the entries for all these entries in all the books. In all the books. Mr. A's books, Mr. B's books, Mr. C books. See, generally Mr. A's book the entry won't change. Okay. The only extra entry will be for the endorsement. And in case of Mr. B there won't be much changes because if you see, if the bill is endorsed by Mr. A to Mr. C, if the bill is endorsed by Mr. A to Mr. C, before going ahead, we will call Mr. A as what? Endorser. Endorser, because he is endorsing the bill. He is giving the bill to someone else. So he will be called as endorser. But the person who receives the bill will be called as endorsee. Endorsee. Remember the terminologies. The person who endorses will be called as endorser. The person who receives the endorsed bill will be called as endorsee. So in this case, Mr. C is endorsee, Mr. A is endorser. Remember this, okay? ER and EE. Remember the terms. Mr. B will only be the drawee of the bill and nothing else. He is the acceptor, he is the drawee of the bill. He is supposed to make the payment and nothing else. He is not carried with anything of the transaction. So coming back to my point, because the transaction was done between Mr. A and Mr. C for the endorsement of the bill, is Mr. B worried about anything? No, because the transaction was done between these two parties and Mr. B is not cared about this. So there won't be any entry passed in the books of Mr. B. In the books of Mr. B there won't be any entries passed. Why? Because he is not cared about any of those transactions. At the end of the day, he is supposed to honor or dishonor the bill. That's it. That's it he is supposed to do. Now let's look at the journal entries. So we are clear with the story. So let's look at the journal entries. Okay. Now endorsement of the bill by drawer Mr. A to the creditor Mr. C. Whose creditor is Mr. A? Sorry, Mr. C. Whose creditor is Mr. C? Mr. A's creditor, not Mr. B's. Mr. B is only paying him because of the bill of exchange. That's it. Clear? So there is no relation between Mr. C and Mr. B. Mr. B is making payment to Mr. C only because Mr. C is having the bill with him, the bill of exchange with him, which was endorsed by Mr. A to Mr. C. Clear? If you don't understand the story, please go back to the story and read, listen to it once again, because this will be really important when passing journal entries. So now, in the books of Mr. A, that is the drawer or the endorser, both in this case. First of all, whatever bill receivable I had in my hand, see, first of all I create the bill, right? Till that point the entries doesn't change. Till the point of creation, pass the sale entry, pass the creation entry, till that point there won't be any changes in the entries. After the bill is created, I will credit the bill of exchange in my books. I will credit bills receivable in my books. Whenever I credit bills receivable in my books, what does that mean? That means whatever bill was created is being reversed now. Why? Because I don't have the bill anymore. Mr. A doesn't have the bill anymore. With whom the bill is? Mr. C. So I will transfer this to Mr. C. I will transfer the bill to Mr. C. Now I don't have the bill anymore, so I don't have any asset in my books of accounts. I don't have any asset with respect to bill of exchange in my books of accounts whenever I credit bills receivable account. This is the part number 1. Now I have debited Mr. C's account. Why? I have debited Mr. C's account. Why? Because Mr. C was what to me? Mr. C was a creditor to me. Whenever I endorse the bill to him, that means I am not supposed to pay him any money here onwards. Who will pay the money? Mr. B will pay the money. Mr. B will make the payment. I won't make the payment over here, right? So because of this, I have transferred the bill to him. So I and he are done. So because of this, I am clearing whatever creditor's balance was there in my books by debiting Mr. C's account. By debiting Mr. C's account, I am clearing whatever balance was remaining in my books of accounts. Understood? Yes. Whenever I debit any creditor's account, that means I am reversing the balance in their account. Then, the bill is transferred to C for settling or reducing the liability. See, in some cases, in my example, whatever I told you, 10,000 was the bill value. Mr. B was supposed to pay Mr. A rupees 10,000. Mr. A was supposed to pay Mr. C 10,000 rupees. There is no issue over here till here. But then what happens? Let us say in some cases, Mr. B owed 10,000 rupees of the bill. But Mr. A owes, let's say 25,000 rupees to Mr. C. What Mr. A can do? Mr. A can give 10,000 rupees ka bill to Mr. C. And for remaining 15,000 rupees, he can make the payment in cash or bank. Done. That's it. That's what he can do over here. Understood? Yes. Now, in the books of A done. In the books of Mr. A we done. Okay. Now going to Mr. C's book. See, Mr. B's book won't be affected. Remember this. In Mr. C's book, who will be an endorsee or the creditor of Mr. A, Now what happens? He is receiving the bill of exchange, right? Mr. C, let us say if I am Mr. C is receiving the bill of exchange from whom? From Mr. A. Mr. A is giving the bill to Mr. C. Now bill is being received by Mr. C. Because of this, it will be called as bill receivable in the books of Mr. C. In the books of Mr. C, this will be called as bill receivable. Why? Because he is supposed to receive money against the bill tomorrow on the due date of the bill. So because of this, it will be called as bill receivable in the books of Mr. C. And I am crediting Mr. A's account. Why? Because in the books of Mr. C, from the point of view of Mr. C, Mr. A is what to him? Mr. A is debtor to him because Mr. A is supposed to make the payment to Mr. C. Mr. A was supposed to make the payment to Mr. C. Because of this, in the books of Mr. C, Mr. A will be what? A debtor. Now, because I have received the bill for the payment, what happens? I can reverse this account. Now, to reverse debtor's account, what can I do? I will credit the account. This is how we pass the entry for endorsement in the books of Mr. C. So C receives the bill from A as the payment for dues. Okay. In one another case, let us say that some amount is remaining. So remaining amount of rupees 15,000, whatever I discussed, will be bank account debited. And whatever 25,000 was pending will be cleared off over here. So 10,000 was the bill value as per our example, and 15,000 will be paid in cash. So because of this, the total value will be cleared. This is how he can clear the whole value. But let us say, so if some of the value is cleared, so only take that much value, that's done. Only take 10,000 rupees. So remaining 15,000 rupees will be still pending in Mr. A's account. Clear? Yes. In case of Mr. B, in the books of Mr. B, no entry at this stage. Why? Because Mr. B has no direct involvement in the endorsement process that is done between Mr. A and C. So Mr. B has no involvement in the whole process of endorsement. It is a transaction. The endorsement is a transaction that is done between A and B. That's it. A and Mr. C. That's it. Remember. Okay. Good. Now, endorsed bill is honored on due date. Now what happens? If the endorsed bill is honored or dishonored, there are two cases. Let us go for the first case. It is honored. What if the bill, whatever is endorsed, is honored? In that case, Mr. B pays the bill amount to Mr. C, who is an endorsee, on maturity. On maturity, after 3 months, let us say after 3 months, Mr. C is receiving the payment from Mr. B. Mr. C is receiving payment from Mr. C. Now tell me what entry will be passed in the books of A. In the books of A, there won't be any entries passed in the books of Mr. A. Why? Because he is no more a party to the transaction. The bill is with whom? Mr. C. Who is making the payment? Mr. B. So Mr. B will make the payment to Mr. C. Mr. A is chilling over there because his transactions are done. He is not supposed to receive anything. He is not supposed to pay anything now. Whatever was there will be done between Mr. B and Mr. C now. Okay. So come to Mr. C's books of accounts. Mr. C's books of accounts. So Mr. C will be the receiver of the money, or he will be called as payee. In this case, he will also be called as payee, or the holder of the bill, or holder of the bill, because he is holding the bill now, right? He is the holder of the bill. So because of this, bank account will be debited. Why? Because he is receiving money. Mr. C, see, we are in the books of Mr. C. Remember this, okay? Don't get confused. Mr. C's book we are in. So Mr. C is receiving money. Whenever he receives money, bank account will be debited because he is receiving money. Asset value increases in the books. And bill receivable account is being created. Why? Since the bill was whatever was there in his hand, for this bill he has received the payment from Mr. B. Right? Mr. C has received the payment from Mr. B. Because he has received the payment, is the bill valid now? No, because the bill has no worth now. Whatever payment was there, he has received, so the bill can be torn off and thrown away. Because of this, I will credit the asset account. That is my bills receivable account. I will credit the bills receivable account to reduce the value whatever was there and to remove it from my balance sheet, to remove it completely from my balance sheet. So in the books of Mr. B, who is a drawee, or we can call him as payer. Payer, okay. Payer. So Mr. B, being the payer, makes the payment. He makes the payment. So the entry will be what? Again, the same honoring entry which we had passed before. So bank account will be created. Why? Because he is making the payment. Bank value reduces, so we are crediting it. Bills payable account will be debited. Why? Because it was a liability before, and whenever liability reduces, because the bills payable is no more worth and we have torn it and thrown away. So the bill is of no use now. So because of this, bills payable account will be debited. Why? Because it was a liability, and whenever liability reduces, we will debit the account. Clear? Okay. In the books of A, as I discussed, no entry will be passed. Now comes the next case, whenever the bill is dishonored. Now let's see what happens. Now it's an interesting case. Please listen carefully. Okay, before coming to this, please look at all the endorsement entry once again, revise it, and then come to this part. It will be really helpful. Now, when the bill is dishonored, we had seen when the bill is honored what to do, but when the bill is dishonored, now what to do? So what is happening over here? Mr. B fails to make the payment on due date. See, at the end of the day, in every transaction, whatever happens, Mr. B is supposed to make the payment. Right? But Mr. B is failing to make the payment now. Then what happens? Endor C, Mr. C returns the bill to Mr. A. And demands payment. Now what is happening? See, Mr. C was given the bill saying that he will make you the payment. But has Mr. B made the payment to Mr. C? No. Now who will Mr. C catch hold of? Again, Mr. A. Why? Because I am the one who had given him the bill saying that he will make the payment. But he has not made the payment now. So Mr. C will come and catch hold of Mr. A. Saying that, make me the payment. I don't know. Whatever it is. The bill was not paid on time. It was dishonored. So take your useless bill. I don't want this bill. And make me the payment now. So Mr. B will be like, shit. This person has not made the payment. So Mr. A will catch hold of whom? Mr. B. So Mr. C is getting hold of me, Mr. A. I am going and holding whose collar? Mr. C's collar. Mr. B's collar. Because Mr. B is supposed to make the payment to me. Clear? This is a triangle. Love triangle. Some people might be crying from a single eye. No issues. Please clear off your tears and let's move on. Move on. So in C's book, okay, whenever this happens, whenever there is a dishonor, what happens in Mr. C's book? What happens? Since C is giving back the bill, the bill receivable account will be credited. Why? Because this bill is no more worth it to Mr. C. So he is crediting bills receivable account. He is crediting bills receivable account so that this bill is cancelled from his books. First entry. And he is again debiting Mr. A's account. Mr. A's account. Why? Because Mr. A again will become his debtor. See, before he had given the bill, so he had cleared off the balance. He is saying that Mr. A need not make any payment to me. Now the payment will be done by Mr. B. But what has happened now? What has happened now? Mr. A's bills is cancelled. I mean, it is not paid, it is dishonored. So he will again catch hold of Mr. A's collar, saying that you need to pay me my money back. So Mr. A's account will be debited once again by increasing the balance in his account. He will be a debtor to me. He will become once again a debtor to me. Clear? Then C transfers the liability back to A as the bill is dishonored. As the bill is dishonored. Then in A's book, what happens? Okay, before going to A's book, let's look at Mr. B's book. Mr. B's book. Fine. So whatever bills payable was there is being cancelled now. Just like the dishonor entry we had discussed before. Remember, in case of dishonor, we reverse the creation entry. So here again, what has happened? I have debited bills payable account to cancel the bills payable account, which was a liability. By debiting it, I am clearing it off. And Mr. A's account is credited because Mr. B actually owes to whom? Mr. A. So whenever Mr. C comes and catches hold of Mr. A's collar, I will go and catch hold of whose collar? Mr. B's collar. So Mr. B is supposed to pay me, I am supposed to pay Mr. C. Mr. B and C were not the party to the transaction. They were only party for the bill of exchange transaction. That's it. Clear? Okay. Now, in B's book, I have debited the bills payable to cancel it off from the books of accounts, and Mr. A's account is credited because he will become my what? Creditor in the books of accounts, right? Because he is supposed to pay me the money back. Sorry, Mr. B is supposed to pay the money, so Mr. A becomes creditor in the books of Mr. B. Okay. B's liability is restored as bill is dishonored. In the B's book, B's liability, what was B liable to? To make the payment to Mr. A, the payment to Mr. A. Now, in the interesting part, in the books of Mr. A, what to do? In the books of Mr. A, who is a drawer, endorser, or what we can say? Now, he is not the holder anymore, so he won't be called as holder. Now, whatever bill is given back to Mr. A, can he show it as an asset in the books? See, Mr. C had the bill. Now Mr. C, because the bill is dishonored, is throwing the bill on his face. On whose face? Mr. A's face. Saying that this bill is not valid. Take away the bill. I don't want. I want my money back then. No bill and all from now onwards. So because of this, whatever bill is being given to Mr. A, is the bill valid, you think? No. Why? Because already the date is passed. It is already a mature bill. Mr. B is not making the payment. Mr. B says, I don't have the money, I won't make the payment. Now what happens? Mr. C, whatever bill he gives, he cannot show it as an asset in his books because this bill, whatever is given, is invalid now. Already the date has passed, right? Because the Mr. B has not made the payment and he has dishonored the bill. So this bill is no more valid. So he cannot open bills payable or bills receivable account ever. Once the bill is dishonored, he once again cannot open bills receivable account. Saying that now the bill is with Mr. A, I will open bills receivable account. No, he cannot open it because the bill is cancelled or it is invalid now. Right? So what will he do then? He will create this entry. He will pass this entry. Now what does this entry mean? Remember this. Mr. A's book. Remember I am in Mr. A's book now. In the books of Mr. A, Mr. C is what? A creditor. Right? Because Mr. A was supposed to make him the payment. Mr. B was what? A debtor. Mr. B was a debtor. Remember, Mr. B was a debtor. Because of this, I am debiting Mr. B's account to increase debtor's balance. I am crediting Mr. C's account to increase the creditor's balance. Creditor will be a liability, whereas debtor will be an asset. Right? We know that liability whenever increases, we will credit the account, and asset whenever increases, we will debit the account. Remember this, clear? Okay. So because of this, B's account is debited to increase the debtor's balance. Mr. C's account is credited because I need to increase the creditor's balance, which is a liability. Okay. Now A is liable to Mr. C and will recover the amount from Mr. B. So now A is liable to C to pay the money and he will recover the money or the amount from Mr. B. Again, love triangle. Okay, moving ahead. Hopefully this is clear. So there's a small part over here where dishonored endorsed bill with noting charges. So with noting charges, if the bill is dishonored, in that case what to do? C gets the bill noted by a notary public. Now, Mr. A is not going to the notary public, but Mr. C is going to the notary public, saying that I will notarize the bill. I will notarize the bill, including the noting charges. So in that case, what happens? Let's see. In C's book, the entry will be A's account debited to bill's receivable account. That was the entry we had passed over there for the dishonor of the bill. For the dishonor of what bill? Uh, Dishonor of endorsed bill. Then I am adding what? Noting expenses over here. In the books of C, noting charges will be recoverable. That's why it is credited over here. It's credited over here is as a income. Who is supposed to pay noting charges now? To Mr. C. To Mr. C, who is supposed to make the payment of the noting charges? Mr. A. That's why Mr. A's account has been debited to increase his debtors balance. Bill receivable account is credited so that to clear off the bill of exchange from the books, and noting charges is credited because it's the income account, and whenever income increases, I will debit the account. Clear? Okay. C transfers dishonored bill and noting charges to Mr. A. See, all of these are independent cases. Honoring of the bill, dishonoring of the bill, dishonoring the bill with noting charges. All these are independent cases, so don't get mixed up. For each of the cases, different entries will be passed. Remember this, clear? For different cases, different entries. So, the honoring is a different case, dishonoring of the bill is different case, dishonoring the bill with noting charge is a different case. Clear? The entries will be almost similar. That's it. Clear? Okay, then going ahead. In Mr. A's books, again he will pass the entry as what? B's account debited to A's account because he was a debtor. And here in this case, he is a creditor. So, as I told you, B's account will be debited and A's account, C's account will be credited. Now, debit B's account the bill value plus noting charges and credit C's account with bill value plus noting charges. Because Mr. A is supposed to pay the noting charges to Mr. C, and it is recoverable from Mr. B, because at the end of the day, who has done the big mess up? Mr. B. If Mr. B has simply paid on time, all these things should have been done. No. Only Mr. C, because of Mr. B, everything is happening. So at the end of the day, it is recoverable. It is completely to be borne by whom? Mr. B. Mr. B. So that's why at the end of the day, Mr. B will be paying the money to me. Now coming to in the books of Mr. B, bills payable account is debited because bills payable is being reversed now. Noting charges is being debited. Why? Because noting charges becomes an expense to whom? To Mr. B. To Mr. B, noting charges becomes a expense. So that's why noting charges are debited over here. Then Mr. A's account has been credited. Why? Because Mr. A is a creditor to Mr. B. Mr. A is a creditor to Mr. B. I am increasing the value in creditor's account now. Whenever creditor's value increases, we will credit the account. B records dishonored bill and agrees to pay noting charges. This is how you pass the entry for dishonoring with noting charges.